Welcome back. As you can see, North American stocks are in positive territory early this trading day as investors, among other things, follow the second day of trade negotiations between China and the U.S. Our next guest is constructive on U.S. stock markets, particularly the S&P 500, which he sees higher by about 6% by this time next year. Brad Bernstein is Managing Director of UBS Private Wealth Management. Brad, thanks a lot for joining us. Your target on the S&P 500 12 months out is 6,400 points. What makes you constructive on stocks over the next year?
We expect conditions to improve into 26. We see earnings growing about 4% this year, 8% next year, supported by a pickup of real wage growth, clarity on tax policy, deregulation, and the resumption of Federal Reserve interest rate cuts, with the U.S. joining the global rate cutting cycle.
How much resolution do you expect on the international trade one year from now?
So our base case is the U.S. effective tariff rate policy will settle around 15%, well below the levels envisioned by the April 2nd Liberation Day announcement. Obviously, trade-related developments will continue to dominate the headlines and will continue to move markets. And right now, this morning, there's a cautiously optimistic tone in the markets coming out of London with the China and the U.S. Second-day deliberation.
15% tariffs are still higher than they were before all this got started. That certainly does not reflect free trade. Do you not see 15% U.S. tariffs as being inflationary in the U.S. economy?
We don't see it being meaningfully inflationary. 15% is much better than where we were on April 2nd, and I think it's something that the economy can absorb without meaningfully pushing inflation higher, which is why we're pretty positive here on markets going into next year and really see conditions improve it.
When do you see guidance from U.S. corporations, first of all, becoming firmer, becoming more definitive, and improving?
Well, we'll just look at the previous quarter. So first quarter, corporate America in the United States was up 78%. Up 13% year over year, with about 78% of companies beating. And what's amazing is if you've heard recently the Atlanta Fed projections for GDP in the second quarter, it has a 4 handle. So what's been remarkable throughout all of this is the resiliency of the U.S. economy. And fortunately for markets, corporate America continues to be incredibly resilient as well.
Let's talk about your favorite sectors. I'm seeing that they are technology and healthcare. Let's begin with healthcare, because a sub-theme you see within healthcare is longevity. Talk to us about that.
Sure. So we believe with the changing demographics, especially in the United States, there's an enormous amount of interest in longevity and wellness. Looking young and living forever, so to speak, is a huge tailwind for the pharmaceutical sector.
And what kind of stocks would benefit from that trend? What kind of stocks should investors be looking for if they want exposure to that long-term trend?
So I'm not allowed to name specific names, but obviously pharmaceutical companies and biotech companies that are investing in products that make people look younger and live longer.
Okay, and you also like technology. What areas of technology do you like?
Sure. So AI and all the beneficiaries of AI. So it's not just technology, which is our preferred sector. It's areas that support AI, such as data centers, such as power. So you want to be looking not only at the chip names, but you want to be looking at the companies that are involved in energy and involved in data centers that support AI. There's just so much growth. And when you look out at the CapEx spending for AI over the next few years, it's dramatically going to increase.